Mr. Incredible.
Yo, Money, what's good, man?
What's going on, Valley? How you feeling?
Pretty good, pretty good. How about yourself, man?
Yeah, same here. Feeling pretty good about episode 13.
Yes, sir. Episode 13.
Yep. Yeah, you see the title right there. When to hold them and when to fold them.
I know, just like at a poker game. You gotta know when to hold them and know when to fold them.
Had me thinking of some cards and poker and Texas Hold'em. That you see the back of every pack.
Texas Hold'em, one of my favorites.
So deuces and uno with me. A big card flair.
So, hey, let's get started. Episode 13, when to hold them and when to fold them. And don't mind none of this back here. Everything's clean. I just don't feel like folding clothes. Just ignore that. But we're going to start off with the very first thing. I know y'all might be thinking, when to buy? No. You got to figure out what you want to do with it in the first place.
Yep. Yeah, and then decide whether the underlying asset you're purchasing is a long or short-term investment. Meaning you really got to look at what you're putting your money into. Not like just doing it, because you just saw some good news about it or everybody else is getting into it. Like it just it comes with the research. Whether you're investing or whether you're a trader too, long-term or short-term, know what you're buying.
Exactly. Know exactly what you're buying. Figuring out whether it's going to be a long-term, short-term, big impact. So, like for a short-term investment, it'll be like from 3 to 12 months. For a long-term investment, that's like a year or anything more than that. Simple, right?
Right. Yep. And then we got examples of that too. Because we're going to be really going into detail on this. So we got like for the long-term examples, what's going to be helping you long-term, because not everybody has patience, but what's going to, I even have ways to help me, some of these ways on my list that help me do long-term because I am a long-term investor and I use some of these ways to help motivate me to stay long-term also, like when I need to. I sell sometimes when I need to, but yeah, I'm mostly long-term. So this is a big one right here, like dividends too, because like you earning the interest off of holding your share, whether it's a stock or a crypto, which crypto is staking, as you see the word under the dividends right there too. So like you hold it, you're getting paid. And then even if it goes down, you're still getting paid. And then when it goes up in the bull market, that's more money right there. So dividends and then reinvesting also, because that's what you can use those that interest or them dividends too. You can sell them, reinvest them, get more shares. That'll help you on your long-term strategy too, because it helps you get more shares of what you're holding, and that's more money. That's bigger returns also.
Yep.
So, yeah. So when you looking at, so that's one of the ways that can help you there, because if you looking at a share like, oh yeah, this is actually going to pay me back when I put money into it without having me selling it, selling my principal, selling the shares that I originally had, minus the interest, then that'll definitely help you right there. That's one of the safer ways. And then yeah, like I said, you can sell the interest or you can use it to reinvest to get more shares, more shares, more money, especially if it's a good buy at that too. That matters. Because some of these bad shares can give you interest too. So that goes back into knowing what you put your money in.
Yeah, and that's the whole entire reason for this particular slide in the first place. You got to figure out whether this is going to be a long-term investment or a short-term investment, because again, this is going to make a big impact on your strategy as far as what you decide and what you're going to do, what your returns are going to be like, or what your future holdings are going to be like. So another one within long-term is future growth. Short-term, like you want growth too, but mainly long-term, you want an outstanding growth, then long-term will be the way to go. So like for future growth. And any price, any crypto, there's going to be price swings, there's going to be ups and downs, there's going to be crashes. But the reason that you're buying for the long term is you see potential growth in this particular asset. You see that's going somewhere in the future. You know, somewhere in the long run, not right now, not within a couple months, you know, it's going to be something big, or at least it's going to mean something to you in the long run. That's why you would go long term for future growth. It has possibilities. It's going somewhere. That'll be one of
Yeah.
the main reasons
Yep.
for long term.
Exactly. And that's how I look at some of these shares. Like some of these coins like XRP, for example. And then like my research, you know, led me to believe that XRP was made to be a $10,000 coin. Because of how much money is moving and what it's made for. And and because of the company behind it has a huge company behind it at that too. So I'm like, yeah, like if it hits $20, yeah, that's cool. That's cool. But I know the potential. I'm based on my research though, but I know the potential. So that's gonna make me hold it to like 3 or 4 figures. I still take some profits along the way, but I'm gonna be really selling when it hits that. So that's an example right there. Like you see the potential in the future, and then you want some of that price action right there, and that's gonna make you want to hold.
Exactly. And these 3, 4 figures is not like within a couple days, couple months. It's going to take a while for that to happen.
Yep. Yep. Long term patience. There you go. They go together.
Yep, exactly. And another point to look at for long term is this is more so on money side, which would be position trading. That's
Yep.
one reason you would do long term. Reason being, you need to find a good position to take. If you have a certain idea where this particular asset is going to go or where it could potentially be long term, you need to set up a position to where you want to trade from, where you want to enter from. Those positions are key areas in the long run of games. And money can talk about a little bit more. I do have I do position trading, but that's more so on money side. Everybody know I'm more of a short term person.
Yeah. Yeah. Position trading, like you're waiting like months, to a year, just hold like, probably a little bit over, like holding this stock or holding this crypto. Like I'm gonna just say share, holding that share for a long time. And then especially if you get in early, and then that whole, and then out of the whole year it even doubles, and then it's a good sell for you because you held it for a long time and then you doubled your money, or you tripled your money. You're just waiting longer than usual to make
Right.
that trade, but you still got your money back, and then you're going to be doing whatever. So yeah, basically a longer swing.
Exactly.
Yep. And then we got like other markets, that fit into this too, because this is all the same concept, like bonds and REITs. Like we went over what bonds was, not bonds was in the previous video.
Yeah, one with
Yeah.
some bombs, man. Tell me about to make.
Yeah, yeah, blow up the market. Yeah, we ain't gonna go bad standing here
Oh,
from Batman Beyond. But look, yeah, so bonds, like we talked about, that that's even the cryptos. Like we talk about the bonds between stocks and cryptos too. But bonds, you buy something, you hold it until it. What's that word for it?
matures.
Until it matures, and then you sell it back. So that can go into the long term trades too. And rates is a way that you can jump into real estate when you're still in the stock market. You're just not owning that property yourself, and then you're doing everything to fix it up, to resell it. And real estate is long term anyway. So with rates, you buy real estate companies that own those properties, and then how you earn your rent through dividends, basically.
Exactly. So there you go. You have rates and dividends coming together long
Yep.
term.
Yep. Markets coming together. Yep. And then of course what and then this is more what I do also, staking, and then there's airdrops. Both of these are terms used in crypto. So with staking, I'm gonna start off with staking. With staking, that's you're practically earning dividends off of holding your crypto. You don't have to set up no mining rigs or none of that. You just set it up in the wallet or an exchange. Really, you should be setting it up in the wallet, self custody. But I'm gonna just say wallet. So you set it up in a wallet, and then you get paid interest in the form of that coin or another coin, and it acts like a savings. Like you're literally getting paid interest off those coins. You're just getting paid in more coins. So that's what staking is. There's different types of staking, but it's the same thing at the end. You're getting paid coins for holding this coin. And then for airdrops, it's different from staking because um airdrops is long term because like you earning well you get coins supplied to you on a certain date when you hold that coins until that certain date. So for example, like like hex, right? Or like if you hold all these ERC20 coins, which is coins on the Ethereum blockchain made from Ethereum, like Hex and Chainlink and all that, just to give an example, you hold it in the MetaMask wallet, and before Pulse Chain come out, and then Pulse Chain does come out, then you get free copies of those coins on another chain. You get an airdrop all those copies. Or another example, at holding XRP, and then you get Flare. So if you hold XRP until, from this date until December, you get a snapshot, which is, a record of like how much you hold, and then you'll get Flare just dropped to your wallet, airdrop, basically for free at that. It's not staking, but you was giving those coins for free for holding those coins because you held all the way to a certain date.
You can almost think of it as like dividends to a certain extent.
To a certain extent, staking is just more consistent.
Right.
Like airdrops, you really waiting, like really, really waiting. So yeah, so that those are all examples of how all this can help you hold your shares. How all this can help you be long term. Can use some of these methods.
Exactly. And these are pretty good methods. Nothing wrong with any of them. It takes a while. That's the only thing. There's pros and cons to everything. It just takes a while.
Yep, and then we got examples of short terms too. And
Yeah.
I'm gonna start with the duplicate position trading. It could be a short term too.
That is true. You can do position trading for short term as well. The gains might not be as much as long term, but remember, you're doing it for the short term. You're looking for that quick money.
Yep, hold for a month or two. That's still position trading right there.
It can be a couple weeks. It can be a few days. Swing trading. Oh well.
Yep. Yep. So yeah, short term flipping. You want to buy something. Regardless of how expensive it is. Like you want to buy a Meta stock that's $200, but you just want to double your money regardless because it's going up within a certain amount of time. Flipping right there, or or scalping. Which you really paying attention to everything that's going on, so you can just flip it quick.
Yeah, and there should be a couple examples in the future of that, but we'll get into that later as far as scalping.
Yeah.
And then another good short term is like what I do is day trading. Extremely short term.
Yeah.
I buy within a day. That same day, it better be gone.
I remember you was like, "Yeah, let me get that Doge so I can scalp it." I get to just match you screeching your head like that every time. That's what made me think of scalping. It's like, give me my money.
For real, like I'll scalp the best out of Doge.
As long as you get it.
Yeah,
So
when it
as
was
long as you get
popping.
it. Oh man. Yeah, ain't
Yeah.
no promises with those coins, but you know how to scalp. I can't tell you that.
I won't say it easy, but you gotta get real in tune with it. Like
Oh yeah. Oh my God. Yeah, and it's hard to pay attention, when you're like busy, especially when you got work and you can't be in your phone like that or your tablet or
Exactly.
whatever you trade on.
I tried doing that at work and I lost a little bit of money. I said I won't do that again.
Yeah, the moment you stop paying attention, the market is just gonna mess with you.
I think that goes back to me trying to be a little too greedy. I should have
Yeah,
just waited till I got home.
yeah, and it's the
Get all the money I could get, and it backfired on me a little bit.
yeah, man, it's the definition of high risk, high reward for a reason when it comes to these, short term methods right there. Because he explained it right there. Yeah, yep,
Yeah, it's a lot of reward involved, but in that same sense, there's great risk on the table as well, right beside.
yep. And then if you dive into cryptos, you automatically high risk, high rewards.
Exactly. They be dropping and rising real
Yeah,
quick.
and and options the same way too. When you're making these calls.
Exactly. Extremely risky, especially if you don't know what you're doing. Even when you do know, it's still a risk.
Yeah, yeah. Just you can't 100% beat the odds in these markets.
Especially got markets like these. It's been a little wild. I say that.
Oh yeah, like man, every time like you turn around, something is going on. Every month, something is major is going on that leads back. And then we got to look back at this month, and that's what the cause of it is. Just like we went at the last presentation, the last video, we talked about it. So you definitely gonna see why this is high risk, high reward if you go back to the previous video
Yeah,
in both
and
markets.
even then, when you know what you're doing, sometimes a lot the way the markets is right now it's a little crazy right now.
Right.
People have definitely made money out of these markets, but sometimes even the best of us during situations like these, sometimes you just got to take a back seat. You just got to sit back and watch what's going on. Sometimes you're gonna have to
Yeah,
miss out on opportunities. Oh well, there's always another day to trade.
that's true. Like how many shares is out there in either markets? Yeah, there's always gonna be a day to trade.
And there's always gonna be a company to trade some stock with. There's always gonna be some crypto to grab under a penny. There's always gonna be some. There's gonna be
Yeah,
something there. You miss out on one, oh well, another one will pop up eventually.
that's true. That's true. So yeah, you got a lot of options. Got a lot of options. Just know what to get into. Through your research.
Exactly. Research. And when you do your research, the next thing you're gonna do is you probably gonna have to buy it.
Oh yeah, when to buy? Yeah, yeah. So yeah, definitely. Like know when to buy. Like just like we were saying, after carefully researching the underlying asset goes into this too.
Yep. You just don't go buy any random stock unless you want to. You do what you want to do.
But yeah, should you be doing it? Like you determine that through your research. That's up for you to figure that out, and hopefully you made the best decision because not everything that's put out there is meant for buying.
At
Like
least sometimes maybe not even for you. Maybe for other people, but not
yeah,
for you. You're
yeah,
not gonna
yeah.
hear us. You're not gonna hear us sit and tell you, yeah, buy stock and crypto XYZ shooting up because you ain't gonna come back to us. Hey, this went down. I lost all my money. Nope, no.
Yeah, man. Yeah, it's crazy. And then this is important too, like finding a solid entry point. All right. And then I can use like what I do as an example, because I have a habit of, you know, buying things early. I still research, but I have a habit of buying floor prices and also being really early in a lot of these assets, and then they're good assets so they can go nowhere but up for me. So yeah, going in real early is a good entry point. And then you know, bear market is an automatic good entry point right there too. Everything that already fell and crashed is just endless opportunity there.
The
And
only
then when
thing
that
with
bull
that
market,
is I got to put like a little footnote in there. The only thing about that is when it's in the state of crashing, you don't know when it's going to stop dropping. So you can buy in a bear market. We just don't know what's the absolute lowest is going to go. So just kind of be careful with that sometimes. It is a great time to buy. But as far as placement goes, it could continue to drop. Like we'll say Apple for some reason dropped to $90 and it just continue to drop. And I'm waiting until it drops to around $60 and it does drop to 60. I buy it. But it continues to drop to like around $30 or $20. I mean, yeah, that sucks, but you gotta look at it like this. Originally, Apple was over $100 something. I bought it for 60. I still came out on top.
Yeah, and then another way you can go about it is, you can still buy when it's going down, but don't put like all your money into it. Like if you had $200 to spare to buy a stock, I mean, yeah, just spend that $50 or 70, and just in case you have a feeling or the way you're looking at things, especially if you're technical, you think it's going to go down some more. Like, yeah, let's see if it goes down some more. The market just crashed, then it goes down some more up. Then there's that fifth. Now you got more shares that you bought, saving that other 50. So now you spend like another $50. I'll go down again, $100.
Exactly. And that goes into, I forget, there's a certain term for that, but it's a type of strategy. Like what Money was saying. If I have $100, well, I know he said we had 200, but we'll go with that. So you have $200 to spare for a stock, and stock XYZ is dropping. Instead of putting the whole $200 in there, let's say I'm just only gonna put 100. But instead of throwing the entire 100 in there, when it drops to $60, I'll buy $20 worth of it. When it drops to say $50, I'll put another 20. When it drops to $40, another 20, and keep doing that. Eventually, it should average out your portfolio as far as how you was buying it, and you consistently bought it at a lower price each and every time. Instead of me throwing the entire $100 at it when it was worth $60 and it crashing more.
Yep. So yeah, there's a way, I mean, we ain't saying it's 100%, but there's a way to be safe, when the market keeps crashing and crashing, because we witnessed it in this crash right there. So I say something, just go below a zero, and it just kept going and going.
Yeah, we did.
Almost to another zero at that. And I'm talking about like shares that's under pennies, get it too. Like people think, oh, no, I can't go nowhere but up, but it'll crash along with everything else and break zeros just going down. It's the same thing. It's the same thing with them too. So no matter how low it is, a crash is a crash. Just remember that.
Yep. It's like jumping off a cliff. You don't know where the bottom is till you smack it.
Oh man, yeah. So yeah, quick and painful in the market. If you lose some money.
I feel like that pain lasts forever sometimes.
Yeah, pain in your pockets, right there.
Exactly. And so that goes into the next point perfectly. Is if you get nothing else from learning how to trade or how to invest, buy low, sell high. If you understand nothing else, buy low when the price is pretty cheap, buy it, and sell high when that underlying asset has reached, I don't know, all-time highs, or is at least higher than when you bought it.
Yeah. I was thinking the exact same thing. Higher than when you bought it.
It was higher when you bought it. Sell it.
Yeah, that should be one of the basics right there. Buy low, sell high. If you got nothing else from this, from what we told you. So yeah, like for example, the bear market to the bull market, the stuff that you bought in the bear market, it go up in the bull market, you sell it, you made money.
Exactly. It may not have been all-time highs. It was at least higher than when you bought it.
Yeah, at least higher than when you bought it. So at least, you could at least get a 2x.
Yeah, at least almost double your money.
Yeah, almost double your money. You get some. Get something. Yeah, buy low, sell high. And then don't do the opposite. Don't buy at all-time highs.
Exactly. I think I stressed this enough in the last presentation and showed you examples of why you don't buy at the all-time highs. Again, check that video out real quick. Again, you at the all-time highs, it has a nasty habit of always crashing every
Jeez, man.
single time. It's not 100%, but we go by what's normally the case, and normally it crashes.
Yep. Both of us witnessed that, in our own experience. Now felt it in our own experience too. I mean, we even mentioned this in dangers of the dangers of the market, or we shared some of our horror stories.
Yeah,
There was a
our
lot of money
pockets felt
lost.
it.
Oh yeah, our pockets felt it. Yeah, quick and painful right there.
I won't pick quick and painful. It's like we was in a horror film.
It
This
dropped quick and
dread,
bought a lot of
this
pain.
emptiness.
It's empty. Oh man, that's crazy. Had no choice but to hold, because they were still good shares. It's just bad timing on our end. And then yeah, so like we had to put that in bold. Don't buy at all time highs. Even other YouTubers will tell you this. They was like, we do not buy at all time highs.
Just look at it,
Look at the
admire
price.
it. Like,
Yeah, admire it. I'd be like, yeah, man, some people got them gains right there. I just wait till it drops so I can get in.
yeah,
So yeah, that's when to buy right there. Yeah, wait till it drop.
exactly. Wait till the drop.
And
And like,
yeah, like yep, bear markets are a clearance sale. So
yeah, I was just about to say exactly. Bear markets, we look at that as a clearance sale. Oh, it's
oh
time to buy
man,
things for cheap. Remember when Apple was $160? Well, right now it's at 90. Example. I don't know what price is right now. This is just hypothetical. Well, right now
right.
it's at 90. It's time to buy.
Oh man, yeah, man. Black Friday, man. Black
Black
Friday.
Friday, Cyber Monday, whatever you want to call it. Like
It's a red Saturday in the crypto market.
it's something. It's a sale.
Yeah,
It's less
it's a sale.
expensive than what it originally was. So take a
Uh,
take a peek. Go window shopping for a little while.
oh yeah, oh yeah, definitely. Like so many choices. Still do your research, but whatever you always wanted to get, but it was too expensive for you. Not as expensive no more.
Exactly. Go take a peek at it.
Oh yeah, definitely. I've seen stuff drop from $1, all the way to 45 and 30. So more than half off right there. You got more than 50%. You got your 60% off. 55 too.
Mm. That's like when I showed the example of SPY when it crashed. I think it was trading like at 470 something. It dropped all the way to like the 390. I said that's almost a whole $100 drop. Like
Man, I definitely learned something. I was like, yeah, like Hex ain't gonna, drop much because it's already like lowest I ever seen it. I already went crazy at 14 cents. It dropped all the way down to 3.
mm,
And I was going in. I was going in. So and then the other coins that was 20 cent did the same thing too. Dropped all the way down to actually 6 cent. So yeah, there's some big sales. There was some big sales of stuff that you was always looking at. It's just like I don't have the money to get it. Yeah, what's your excuse now?
exactly. It's on sale right now. Better get it.
Yeah, because it ain't permanent either. And people make a lot of money off of crashes. Bear markets, crises that cause the market to go down. They make a lot of money. Like even the richest people say, they made a killing. Off the recession, or when the housing market was going down, they was just buying more property. All these stocks was going down too. And
Right.
they made a killing in the bull market. All that multiplied. So yeah, it's like no matter what market you in, the sale is a sale. You make a killing
Yep.
because
Easily make a killing.
everything will crash. And yeah, man, and buy responsibly with your money too. Like this goes what to we was talking about earlier. Don't fall for scam. And all these bad influencers that get paid off to promote. This bad stock or bad crypto.
That's true. So always buy responsibly with your money. Even though we're talking about sales and this and that, all you guys a couple $100 that you can spare for stocks and cryptos, do no more than that. Use only what you're comfortable with. You only comfortable with $50? Use $50. You only comfortable with 10? Shoot, I don't care. Use $10. But
Yeah,
you
yep. Yeah, just like I had to start off light too, work my way up. And then you got people on some of these people on the documentaries that I mentioned, and then another, then a future documentary too that that they use the money that they was going to pay their mortgage with, to buy these shares and take a chance, and then they
I
put
hope.
their then they put their whole life savings into this one crypto that got stolen.
I was about to say, I hope they succeeded. Never mind that.
And nah, they ain't succeed. They still trying to get that money back.
You put your
Yeah.
whole life savings. I was like, well, I hope at least by chance somehow they succeed.
Oh man, I hate hearing stories like that too. And then if you got to pay your rent, pay your mortgage, I mean, there's nothing wrong with putting your priorities first. You know, because
There's nothing
you're
wrong. You
you're
should
being
put your priorities
responsible.
first.
Yeah, I'm just saying, like, because people go crazy, and then it's like, nah, I can multiply all this. No, no, do what you're gonna do at first. Pay your bills.
Pay your bills first.
Yeah, and then if you're in debt, pay a lot of that off first. Ain't nothing worse than trying to invest in debt and being even more debt.
Ain't that the truth? And these markets can put you in debt. I
Oh
think
yeah,
quicker than these loans and stuff if you don't know what you're doing
oh
or
yeah. I
not paying
learned I
attention.
learned the hard way too. Investing in debt, you don't want to do it.
Terrible thing. Terrible thing.
Yep. So yeah,
And
humble yourself.
exactly, humble yourself. And well, as my nephew would say, be humble.
Oh man,
Uh,
yeah, yeah. Be humble, Uncle Velly.
be humble. So the next thing, point we want to get into, one of the good indicators like when to buy is usually when you trust your strategy, your edge, market context, and indicators. All that's saying is well, everything's telling you, your indicators will tell you everything's good, your strategy's working fine, it's falling into your plans, you have your edge, is working excellent, you know the market context, you know the market situation, and everything's telling you green lights, then hey, go for it.
Yeah, and then and let your experience, learn from your experience, and then of course we're gonna always stress this research and practice. Get to the point where you're confident in what you're actually doing.
Exactly. Take some experience, take some practice, test your strategy. They have paper trading. Some of these apps, Trading View has, I think, paper trading where you can trade stocks with paper money to test your strategies to see if they work or not. So always back test, look at history, look at what you've done in past trades, see what worked and what didn't work, what mistakes you made, what executions you could have made, or you were too scared, or whatever the case was, not confident enough to make that move. Back test and backlog everything.
Yep, yeah, that's true because yeah, you're gonna need it, and you're gonna need that confidence too, because you're investing and then you're not confident, and, you wade into your emotions too, like the market, will mess with you, like do the exact opposite of everything you wanted to do, and then especially ain't nothing worse than second guessing yourself too, because you can miss out on opportunities like that.
Definitely true. Definitely true. It's okay to miss an opportunity. There's more to come. There's more to come. So we definitely went over when the best time to buy. So now you want to make some money. So what's the next thing we got to get into?
Oh yeah, when to
When is the
sell.
right time to sell?
When to
Exactly.
sell.
And now you're trying to make some money.
Oh yeah, man. Yeah, same concept too. Buy low, sell high.
Learn
If
the
you
buying
haven't got
part.
anything else, yeah,
Exactly.
you still got to sell high.
Exactly. You didn't bought low. You bought it when it was at a low price. And now you got to sell it. Sell it higher than what you bought it for. If it's more expensive than what you bought it for, sell it.
Oh man, he was like, "Yeah, don't ask questions, sell it if you want to. Though you want to make some money, you want the money right now. The money is right there."
It's like you get nothing else. Like this is the most dumbed down version we could say. Just buy low, sell high. That's it.
Yeah, the basics. Yeah, if you had to go back to the basics, do that.
Exactly. Yeah, this will save you a lot of trouble.
Oh yeah, well, yeah, I learned that from experience.
Exactly. So, what would be the best time to sell? During a bull market. Sounds weird, don't it? Wait, a bull market means everything's going up, price is higher. Exactly. So sell.
Yeah, because remember, it looks like we're working backwards. That's the point. That's how it's supposed to be. Everything's everything's down. You buy it's a sale, but everything's up. What you already bought is up, right? So
Right.
yeah, if you want the money, sell it.
Exactly. You bought it for cheap. Now the markets are doing good. They're recouping. It's like, I don't know, PS5. Say for whatever reason, the PS5 for some reason on sale for $300. You bought it. Now everything's doing great. Now they marked the price of the PS5 back up to $500-$600. What you gonna do? You gonna sell it?
Yeah, you're gonna get that money back, and you still gonna have a system. You got enough to buy a system.
Exactly. You will get that money back and enough to buy it again and keep some of the money. You're gonna
Yeah,
sell it when it's higher, right? So that's the same thing you do. You bought it when it was low. There's a bull market now. Prices are just shooting up. Sell it. Simple as that.
yeah, simple as that, man. Man, you know how many games you can buy for $300 right there that you just got.
Exactly.
Oh man, and then yeah, and you can sell during the uptrend, where everything's going up. What you got is up, and you want that money, yeah, sell it. During the uptrend,
Exactly.
or straight up. Them candles, yeah, you see all them green candles, it's just going up.
I was like, well, I ain't finna wait around. Sell it.
Yeah, sell it. Yeah, if you that type of trader, you want your money now, you want to be in and out, why not sell?
Exactly. Another indicator when to sell. Whenever you're comfortable with the estimated returns. What do we mean by that? Estimated returns. If you bought stock XYZ for $100 and the goal was at least to wait until stock XYZ hits $200. But say you see it's around, because remember you bought it for $100, you wait until it goes to like say 200. But say it's at around 150. You've already made extra money. It's at 150 now. Technically, you could sell it if you're comfortable with selling it around that price. Sell it. No one's going to fault you for it. I wouldn't fault you for it. Yeah, sure, it wasn't your goal. The goal was 200, but the goal is to make successful trades and to make profit. You bought it at 100, it's worth 150 now. Technically, that's still a profit. If you want to take it, take it. No one's going to shoot you down for it.
Yeah, because you're getting your money either way. You get more money than what you put in.
Exactly. You made returns. That's the
So that
goal.
yeah, if it's close enough, like on one of the shares that I know that's going to go to the dollar, to a dollar based on my research. If I think it's going to go to like a dollar by the end of the year, and I'm planning on selling, around that price, and then if it hits 80 cent, then I'll be like, yeah, I pretty much double my money. I'm gonna just take it out. 80 cent, close enough to a dollar.
Yeah, close enough. Oh, well. I made my profit.
Yeah, it made my profit.
And
So,
sometimes it be like that. There's nothing wrong with it at all.
yep, yep. And then if you're comfortable with it, nobody can tell you wrong. He made more money.
Yep, that was a goal. You made more money. So, hey, what's another indicator to sell? It's going to sound weird when you're at your stop loss. Now, I think we went over it. I
Yeah,
might
we
be.
we did.
Did we? I
La-
can't remember.
yeah, with the Tesla thing, I mentioned it, but I don't think I was no, I wasn't specific. I just mentioned the term, but yeah, well, we just didn't go deep into it. I just mentioned it.
I might have to make a little short video of stop losses. But
Yeah,
to give you a quick example, what a stop loss is, I think, like I said, we talked about it a little bit in the previous video. This is more so, well, everybody has a stop loss, but say when I'm actively trading options, if stock XYZ is like $160, and I buy a contract for it. My stop loss will be a little bit lower than that. Say $140. If it trades at 140, if it hits that 140 mark, I'm selling because I'm losing money now. That's what a stop loss is what you're willing to lose. How much you are willing to lose when trading a stock or a crypto. That's what a stop loss is. So when you hit your stop loss, the money you're comfortable with losing, exit the trade. Do not keep holding it because you're going to run into a problem. I've done that, not first few times trading, but in my beginner experience of trading, when I used to hold, I'm like, well, maybe the price will go back up. I'll just keep holding. Well, it still could potentially go up. And I've ended up with nothing.
Oh man, yeah, that brings back the pain too. Because I remember I bought something at an all-time high, and I could have used a stop loss then, and it just kept going
Exactly.
down and down and down. And then if you notice, how he explained it, it's the exact opposite of the last bullet point is whenever you're comfortable with your estimated returns. The exact opposite.
Yeah, it's
Whatever
what
you're
you're
comfortable
comfortable
with
with
losing.
losing. Exactly. It's what you're comfortable with losing. Because think about it, if I bought stock XYZ for $100 and keeps trading, well, no, let's not say that. Let's say it costs 200. It costs $200 and it starts trading below 200. Say it hits 190. Okay, that's cool. 180. Okay, maybe I can hold on for a little bit. 170. Nope, that was my stop loss. It's time to exit out. Because you know why? I was only cool with losing $30. Some people will hold until it drops to $100. You don't realize it.
Yeah.
You've lost $100. Now you have to try to gain that money back. But say the stock still doesn't trade upwards. Say it's in a downtrend. Now you're even losing more money. If you had just sold it at 170, you only would have lost $30.
Yeah. So think of it as saving yourself.
Exactly,
That-
saving yourself. That's the best way to think of it. That's why we say when you're at your stop loss, do not try to hold it. Don't sit here and try to have faith within the crypto or stock and just pray you'll go up.
right.
Like forget all that. It's at the stop loss. Sell it. It's gone. We'll try. We'll try again.
So, yeah, another opportunity. I still got most of my money. I
Yeah, we still
I
got
could have
most of our
lost
money.
more because you're gonna
Could have
be
lost more.
sore, after you lose all of it or majority of it. Trust me, you don't want to go through that.
Exactly. You're just gonna be
Oh man,
staring
and
at
but
like
yeah, yeah, it's a humbling experience
crazy,
right there.
right?
So if you have to sell, do it.
Very humble.
Very humble, yeah. And then what we're about to get into is more on the safer side. Well, I mean, yeah, this is safe, but this is safe also, and which is interest or dividends, whatever. Depending on what you're doing, like I'll say interest or stakes. When I'm talking about cryptos, like I use them interchangeably. Dividends, more for stocks. But whichever one you're holding, you're getting returns, and then you're just only so if you want some money, you can just sell your returns because that's the money that you just that you got for free. Basically, that's your money that you got for holding a certain share. So you still got the same amount of money that you had before, which is your principal. Okay, and then you got the interest from that principal. So you're not touching the money that you put in there before. You're touching the money that you're getting paid now, and then that'll help you determine when to sell. When you want that money right there, you could just sell your interest.
Exactly. There you go. Perfect example of crypto when to sell.
Yep.
So let's get into the last bullet point. Was another best time to sell
Oh yeah. Sell at the all-time high.
at the all-time high. It's the opposite. Remember, we said don't buy at the all-time high, but you can most definitely sell at the all-time high.
Oh man, you better make some money.
About to make some money. If I bought stock XYZ for $100 and I'm just holding it, whatever. And next time I check the charts, I hear on the news, stock XYZ it hit the all-time high for $360. Boy, I'm about to sell. I ain't finna wait nothing, this and that, research that, whatever. I'm selling.
Boy, I'm about to say.
I've almost quadrupled my money.
Oh man.
I don't care if I miss out another opportunity. I quadrupled my money. Don't care.
Quadruple my. Oh man, then you had the same reaction with Doge. I was like, oh boy, I'm about to say, I ain't waiting no more. It's higher than I ever seen. I'm gonna sell.
Oh, yeah, I'm selling.
Oh
I wasn't even
man.
paying attention to it for a while. That just happened to see it. What, 70 cents?
Oh man, yeah, that's what I did with MoneyGram too, man. You know, I went from that, $3 to nearly 10. I was like, that good enough for me. Black Friday.
Yeah.
Yeah.
I saw dudes. I was like, y'all can fight over it's gonna go over $1 or not. I'm gonna see them dollars in my account.
Exactly. Same thing with Santana. There we go.
I'm not fighting with y'all. See if it's gonna go for $1. It's good enough for me. I
Yeah.
think what 77 cents. Oh, good enough.
Yeah, exactly. Especially if you bought a lot of shares. I just earned $100. There you go. I didn't want up a whole dollar.
Exactly. I was like, y'all can keep fighting over. I don't care.
Okay, I made my money. I ain't worried about nobody else.
Yeah, I ain't worried about none of y'all. Don't care if it does reaches $1. Oh well, I made my money. On to the next thing. Like,
on to the next thing. Yep. Flip it. Get the return. Snatch it. Flip it again. That's how people feel when they scalp it. Anytime it go up, it's higher than they ever seen. They instant trading.
So,
oh man,
sell at the all-time high. You bought it for low, and it's reached the all-time high. Shoot, sell it.
Sell it.
So, let's get into the next point, man. We talked about selling. We talked about buying. What if you were in a neutral place? You don't want to do anything. Well, I just want to learn how to when to hold them. We talked about when to fold them. Now let's talk about when to hold them.
Oh yeah, and then just like we bring back, certain bullet points because it works for more than one thing, more than one method, and that's interest or dividends.
Exactly.
So, yep. So I'm gonna give another example. Like what's going to help me hold during a crash, like we witness, especially if it's as bad as we witness, and then I'm just like, I'm not even thinking differently. I'm like, it go up because I'm still getting paid either way just by earning the interest off these stakes. And then, when it goes back up, I got more shares. So more shares, more money.
Exactly.
So, yep. So interest or dividends, and yeah, for long-term investing too, goes right back to what I was saying, these coins that I'm holding for long-term, just because I want to, stake them, that holding it is going to help me, in my long-term investment because I'm holding it for profit. So yeah, so a tip for long-term investors, if you want to hold, that's your tip for holding there. Same thing goes for stocks, because whether you earning dividends or staking, you're earning interest. And yeah, and then for asset for future potential growth, like what I talked about with XRP, in the last example, still matches with this concept because its potential to me is $10,000 or up to $10,000. So that's gonna make me want to hold, all the way, until it gets to like 3 or 4 figures, and then I'll start to sell a whole lot. But I'm not going to sell, when it hits $20 or $30, even though it's pennies right now, just because I know, like in my mind, though, based on my research, I got this potential price appreciation in my head from how much money is moving, and for all these big banks and big institutions that is going to be, in the mix.
Exactly. You're seeing it as it's a big deal. Other companies are seeing it as a big deal. Other companies are making financial moves around it. They're making contracts. It has some type of worth. It
Yep.
has future potential. So he's holding that because others see future potentials, not people at like our level, like just normal traders. We're talking about financial institutions see it as some type of worth. If they see it as some type of worth, and big financial figures with money like Warren Buffett and others see it has some type of potential, I'm gonna follow them. I'm gonna hold that too.
Yeah, get a piece of that pie.
Man, I'm gonna get a piece of that action. What they seeing?
Exactly. The same thing you're gonna be seeing when you do that research too.
Exactly. You just gotta do some research. And
Yep.
so another reason why well not to sell or buy is just to hold it is during FOMO. And we went over that FOMO is an acronym for fear of missing out. And what we mean by during FOMO, there's a lot of hype surrounding whatever particular assets you're holding, and people are selling a lot of it or buying a lot of it, and just say the price is just skyrocketing, or it's just we'll use the example of the price is just dropping and everybody's selling it. But again, say you see for future potential within this asset, you know it's going somewhere, or you know this is just a kind of a normal thing. Yeah, it'll crash, but it'll come back up. It's not going anywhere. Hold on to it. Or if you don't know what to do, just hold on to it. Cause you don't want to follow the hype. You don't want to miss out. You can just hold and see what happens.
Yeah, yeah. See what happens. Whether everybody was right, when they just putting their money into it, or the public was wrong. But either way, you held, and then you stayed safe.
That's true. That's why sometimes again, when I say earlier, sometimes you gotta take a back seat on things. Just sit and watch. It's not meant for you to take action within this game. The round of this game wasn't meant for you. You can join the next round.
Yeah, that's true. And then just like this gave me a flashback too, and everybody was going crazy over Sheba coin. Also, you got people that made the money later on, but when people kept FOMOing, buying the coins, like, oh man, there's a trend right here, and then it ain't end up doing nothing, and then that's when people got impatient. At least you bought when you bought it, it held. I'm like, yeah, I got 1 million coins. That's good enough for me right now. I would just hold it to see what happens. If everybody's going crazy for a good reason, or it's just going to drop right on them. Like especially when you bought like when everybody else bought.
Exactly. I didn't even take part of She because I saw no really worth in it. Was it potential to make some quick money? Definitely was,
Yep.
but I saw no worth in the long run of things, or even taking a chance at it. 'Cause I felt like it was just gonna fall down on me. Knowing my luck, it would just fall down on me. I did my research. I'm like, nah, I don't need to take any part in this. I've already took part in Dogecoin. I don't need Shiba Coin was made just after that for the hype.
For
There's
the
no
hype.
point in taking part of it. Now, if you want to stick like $10, $20, sure, yeah, do that. I have no qualms about that. I could have done that, but I just say, I'm gonna take a back seat on this. I don't want to have nothing to do with this. On to the next thing. Didn't care.
Yeah. Yeah, man. And then a lot of and it brought in a lot of newcomers, to crypto. That's the good thing about it. But the bad thing is what they chose to start on. Not that it's a bad coin, but it didn't do what everybody thought it was going to do. And I've been holding the same amount for the longest time, and witness everything from everybody going crazy over it to now, more and more people talking about selling it because it ain't doing nothing.
Yeah, and that went back into that FOMO thing because people heard the Dogecoin thing, then the Shiba coin. And this is the next big thing. This is the next thing for crypto. You don't even know anything about crypto, but you're talking about this is the next big thing.
Yeah,
I
just
don't even know
because.
much about crypto, but I know more than you, and this is not the next thing.
That goes into doing your research, knowing what you're doing, and just because everybody jumps into it and you jump there with them, don't mean something's going to happen. you know, like the odds is
Exactly.
always against you.
Exactly. That's what I'm saying. I don't even know much about crypto. I know a decent amount, more than the average person. But as far as like you and all these other people, I have no idea about cryptos. Y'all can talk to me to death about information. I can't follow along with y'all. But even I knew, no, I need to stay away from that.
Yeah, because it'll be a long time. It's looking like before hits, get to where Doge was at, and then the big part of the reason why it got to where it's at was Elon Musk.
Exactly. And you know, the only reason I even heard about Shiba is because it was so much hype around it. And what we tell you, don't be getting into the hype. I heard the hype. I would have never found out about Shiba until it was all that hype about it. I said, I found out about Shiba because of hype. Should I hop in
Yeah,
this? Absolutely not.
absolutely not. And then you got people saying it can go nowhere but up. But we already went over, just because the coin is low and like way under a penny, and then everybody is getting into it, doesn't mean it's going to do what everybody think it's going to do. Not everybody's not going to get rich that easily, because the market
Exactly.
goes up fast, but that don't mean you're going to get rich instantly.
Exactly. Not again. Could you have made money off it? Most definitely.
Yep.
Short term, of course. Long term, I see no worth in that. But definitely short term, you want to make some quick money, you could have. But I saw that wasn't an entry for me. I came in around the hype, heard about it from the hype. I've already done Dogecoin and a few other things. I'm like, I don't believe half this stuff y'all talking about this crypto, and I don't even know that much about cryptos, but I know it's not what y'all thinking.
You're
I
right.
know enough. I know enough, and it's not that. So I will take no parts of this. Y'all can, lose all your money in this. I'm not having no parts of it.
Yeah, man, I still got the same $10, $20 I already put into there. So I didn't go in expecting that, oh yeah, shit was gonna be this and this and that. No, I just wanted a lot of shares, and I'm comfortable with holding it for more than a year too, because I think it's gonna go somewhere, but not as fast as everybody thinks. But I still hold the shares.
Yeah, and it was only $10. What's $10? Yeah, you could lose $10. Who cares? Because it's only
Who cares?
$10. That's fine. So there's nothing wrong with money doing that. You only put $10 in. Wow, I lost $10 compared to some people that was putting thousands of dollars in there, and then it crashes. They lost thousands, and some that was all they had. I'm not doing that.
Yeah, man, because I seen like coins, like a lot of coins under a penny. Like, yeah, people saying they can go nowhere but up, but I seen coins that the type of coins they would say some about that, but but it stayed under a penny, and then they got exposed for being scammers, and the coin never went up ever since. So no, like just because it's way under a penny, don't mean it can't go nowhere but up. The good ones can, but the bad ones no. And then there's a lot of bad ones. So again,
Exactly.
do your research, know about the company behind it, know about the crypto.
Hey, beat me to it. Just about to jump in and say that. Do your research.
You can say it again too, because that's all we're gonna be stressing
Yeah,
the
great,
whole
great
season.
minds think alike. Do your research.
Yeah, man. Before we go, T Pain mode, or you'd be like, yeah, do something else. Stop doing everybody else, but everybody else do.
Exactly.
We already
Do your
seen it.
research.
Do
And
your
then
research.
exactly. And it's another good time when to hold if it's a part of
Uh,
your strategy.
yep.
What I mean by that is literally what it says. If it's a part of your strategy, it's going somewhere, it's just a little crash, nothing wrong with it. You're holding out for the long run, or it's going to spike up in price, whatever the case is. If it's a part of your strategy to hold, then hold. There's nothing wrong if it didn't work out because this is your strategy. This is your money. You're the one responsible for this. Don't follow everybody else. If this is a part of your strategy to hold, then by all means, hold.
Yes, sir. And then yeah, just like I'm mentioning again, I'm more of on the long term side. So all these points, actually most of these points add up to that point right there, if it's part of your strategy, because interest and dividends, is part of my strategy, for long term investing. And then for the ones that I'm not earning interest off of, I'll still hold it for a long time because I see the the growth potential, in the future for it, especially if it's big as, like Hex or XRP or even XLM, those like those last two coins I mentioned that are in the mix with all, these big things happening within, the transfer of wealth and all these big banks and big institutions, like I'm a mention. So yeah, so I got shares that'll pay me back, and I also got shares that I'm gonna hold for a long time because I think they're gonna do triple to quadruple digits, maybe even 5 digits for some of them.
Exactly. It's part of his strategy to hold, then he's going to hold. Nothing wrong with that. And then the next one's actually a pretty big reason. Very important for tax reasons.
Yeah, that's one of the ones that keep me going too.
Look, you got to hold on to some of these assets for more than a year. If
Yeah.
not, taxes is going to eat you up.
Oh my God, yeah, capital gains. I hate it. You telling me 37%?
They finna take it. So if you haven't held on to it for a year or more, you better hold on to it. Keep holding.
Yeah, man, reduce it as much as you can. Like I can deal with 20%. I can't deal with nearly 40 unless I
Exactly.
get that much in returns. All right, I can. It's just unfair.
Exactly. So we're not saying you can't sell it before the year. You definitely can. Just know taxes is going to take a piece of that, and they're going to be, oh yeah, you sold it before a year. Let me see how much you got real quick. Oh
Right.
yeah, this is how much you made. Oh, all right. Yeah, we'll get a piece of that. Nice doing
Oh.
business with you.
Yeah. Your hard earned money. The government got to dip their hands into everything.
Every little thing moving. Just you got to hold on for about a year or more, and it won't be as bad. Now,
Yep.
that's the beauty of me trading options.
Yep. Yep. And you got the contracts and
Yeah,
and
I'm
everything. Is that
not
the actual share?
exactly. It's not an actual share. This is just a contract. It's saying I have the right to purchase this stock at a certain
Right.
price. I'm not actually holding the stock. It's just saying I could buy it. You have the right to buy it, and I have the right to decline it. And that's exactly right. You ain't getting none of this. Now they still got their ways of getting to me.
Oh yeah, Uncle Sam, man. Yeah, don't forget what country we live in.
They're gonna find a way.
Yeah, they're gonna find a way to just make it not as much for them. That's the thing, and then that's why I'm not. I mean, I worry about it, but I ain't gonna be worried about too much of them taking a chunk of my shares because I hold for more than a year anyway. Because I hold on to my principles, which is the amount of money that I put in the first place for these shares to pay me. Without having to
Exactly.
take out, yeah, without having to take out money that I put in there in the first place. So I'm going to be holding for a long term anyway.
Exactly. And then if you're investing for the long run, potentially not really gonna be doing too much selling in a sense because you're holding for the long run. You seeing it's going to go somewhere. So why sell it for chump change when you know it's going to be worth a few hundred or thousands in the future? You're going to sit and wait, right? You're going to hold.
Exactly. So I'm more likely, to be 20% or under that. Like I said, I can do 20%. I can't do no 40.
Exactly.
Yeah, that's too much money.
Way too much money. Forget that. I ain't getting none
Yeah,
of this.
yeah, it's bad enough they taking out taxes out of our checks, man. And they want to do it with our side money. Come on.
Exactly. So there's ways around that. Just know. Hey, what's good, John? I'm co-host from the Money Valley podcast, or as you already know, had to interrupt just real quick because for one thing, this video way too long. This video is almost 2 hours long. So we're gonna split up into two parts. Of course, the first hour and 5 minutes is gonna be part one, and the next one is about an hour. It's just gonna be part two. So from right now, this is kind of end of the video. So make sure y'all like, comment, subscribe, and we will catch y'all next time. So peace.